All right, so turning to the news, we have this article from Bitcoinist.com where the U.S. Federal Reserve is issuing a Bitcoin warning. What do we have here? The U.S. Federal Reserve issues warning urging that measures may need to be taken in the future to prevent financial instability if more money is invested in Bitcoin. I mean, that seems like an interesting statement that almost seems like a scary statement. This is exactly what we're talking about. The more money that goes into Bitcoin, the more money that goes into cryptocurrency, especially as we get closer to some sort of financial correction or worse, the weaker that the US dollar becomes, the weaker the US dollar becomes, the more urgent it's going to be for the Federal Reserve and the central banks from whichever countries are affected through this to maintain stability of the dollar. Essentially, people going to their banks and exiting, the U.S. dollar into Bitcoin, transferring more and more money from their bank accounts to Coinbase and from Coinbase into Bitcoin, that is essentially the same thing as having a run on the banks. And so right now, you see the investment accelerating. Well, there's going to come a threshold when the investment turns into an exit, and the exit is accelerating. The Federal Reserve is aware that this is the process in which it happens. They're aware that this is absolutely going to happen as difficult times come to America and come to the Federal Reserve, come to the dollar, because while we've been going up and up and up in terms of the stock market since 2010, that up and upward trend cannot continue forever. Warning for these digital currencies, specifically Bitcoin, is that they pose financial stability risks. They predict a 10% reduction in Bitcoin's price on Friday, which has brought it to $11,000. So you can see how this article was, pretty old. When does this article come out? Just December 3rd. So Randy Quarles is the federal vice chairman of supervision. And he says that more serious financial stability issues may result if they achieve wide-scale usage. Digital currencies are a niche product that sometimes garner large headlines. Now, he's saying that Bitcoin has no intrinsic value, and it's not the liability of a regulated banking institution, and in leading cases is not the liability of any institution. Indeed, how to treat and define this new asset is complicated because they don't want to call it a currency, because they don't want to call it a commodity. They don't want to, no matter how they call it, it creates pros and cons for each of the different peoples involved. And so it just is a hugely complex subject from them, from their perspective, because there's no winning position for this to go through. Mr. Quarles goes on to say that in an economic system, the current system could be greatly challenged by liquidity and credit risks brought about by a lack of stability exchange rate between cryptocurrency and the US dollar. And the lack of a stable exchange rate, as we've been seeing the price of Bitcoin go up, I'm just interested in trying to figure out, is the price of Bitcoin really going up? Or are we just simply seeing a certain level of inflation with the US dollar? And when we read articles like this from Bitcoinist, and we see what the Federal Reserve is saying about talking about the challenges between liquidity and credit because of the lack of stability in the exchange rate between the US dollar and cryptocurrency, between Bitcoin and the US dollar, in times of adversary, in times, like we're talking about in the potentially near future, where there could be economic uncertainty. Those are the times of adversity that the exchange rate between Bitcoin and the US dollar could cause the economic system to be greatly challenged by liquidity and credit risks. Because of the stability of the exchange rate between the different cryptocurrencies, specifically Bitcoin, which has the greatest network effect, which every other cryptocurrency is dependent on in terms of its exchange rate. Bitcoin is clutch, and Bitcoin is clutch against the US dollar, with the US dollar, and how this evolves once it gets to a tipping point is going to happen very quickly, and it's going to be very, very interesting. This article goes on to say that given that Bitcoin specifically is seen as the potential successor to the US dollar, why would anyone want to challenge a dominant backed currency for fiat currency that's backed by the government decree. Bitcoin has the advantage of being decentralized. Bitcoin has the advantage of being peer-to-peer. Bitcoin has the advantage of needing no middleman, no single server, no single country, no single anything for it to exist, that it currently exists and will continue to exist forever until the end of time. It's a cross-border payment method. It's an ability to store your value, and that ability for it to store your value is coming from a limited supply. What do you think about this warning from the Federal Reserve? Do you think that this is a sign of the things to come? I guess the real question is, what are the next steps? So if they're urging that measures may need to be taken, I guess the real question here is, what are these measures? They must know what these measures are. And so what do you think that these measures would need to be that they're thinking about that would need to be taken place?